SLFRS 13. Fair value measurement. Right. Now, when it comes to fair value measurement, you should know the scope of the standard. Scope of the standard. So actually, what are the items that this standard is applicable? Therefore, I would write these things in blue color. Generally, if we are eliminating items from the scope of respective standard, we use generally in red color. But here I'm going to tell you items which are relevant under SLFRS 13, right? Now, when you take fair value, there are many instances where fair valuation is used. For an instance, LKAA 16 in subsequent measurement, there is a method called revaluation method. Cost model and revaluation model. So if that organization use revaluation model for subsequent measurement, then fair valuation will be used, right? Then another example, LKS 40. IP investment properties. LKS 40 investment properties. Subsequent measurement again, cost model and fair value model. So fair value will be used. Then SLFRS 9. Already you are aware, all measurement, initial measurement for all classifications, we use fair value. We use fair value. See, so I can give many examples which applicable for fair valuation, right? So this is very, very important standard. So this standard explains how, what is the definition of fair value? What is the definition of fair value? Fair value definition is given. Value at which receive to sell an asset or pay to transfer liability in an orderly transaction between in an at the measurement date with market participants. So there are unique features of the definition, right? So we'll take these unique features of the definition one by one. Please take down this particular structure in the writing book, SLFRS 13. So first you need to mention the scope. Under that scope, you can write. So these are the learning outcomes of today's lecture. At the end, you will be able to explore the role of fair value accounting, definition of fair value, then key aspects of definition of fair value, as I mentioned, orderly transaction, market participants, measurement date, there is a price because price at which receive to sell an asset or transfer or pay to transfer liability. So there is a definition on price. Okay, then explain how fair value should be determined for assets, liabilities, and own equity instruments. Then 3 valuation techniques. So we will be discussing 3 valuation techniques. Right, this is the scope. So as I mentioned, so I already gave you some examples: PPE, LKS 40 investment properties, Then financial instruments SLFRS 9. These are the instances where the fair valuation is done. Fair valuation is done based on these respective standards, right? But fair valuation measurement is explained in SLFRS 13. SLFRS 13. So this is the founding standard, main standard for the fair valuation, right? This standard guide us how to do the fair valuation, So applications are in respective standards like this. Can you please write down under the scope? Can you please write down under the scope? Right. Moving on. Now, this standard, as I mentioned earlier, this standard is very important because there are some standards which emphasize cost model, right? With fair valuation method, there were a lot of arguments. It's violation of prudence concept because people are trying to overstate assets. So it's directly badly influenced on prudence concept. So there are a lot of arguments. So this is paradigm change, significant paradigm change in relation to measurement, right? Because historical cost, there are some limitations under historical cost. One can argue that the historical cost method, giving outdated information, not relevant as such, right? It badly affect on fundamental qualitative characteristics, relevance, right? But fair value accounting, up-to-date information, more relevant, right? More relevant. But there are challenges as well in terms of accuracy. Faithful representation, when relevance going up, faithful representation can be reduced because it could be challenged or free from errors. Free from errors item would be challenged with the fair valuation because there are a lot of judgments. Judgments are involved with the fair valuation. Therefore, one can argue that the accuracy is limited. Then faithful representation would be declining. So, but there should be a trade-off between relevance and faithful representation. Relevance and faithful representation. Right. Okay. People who propose fair value accounting believe that this would enable to deal with criticisms of historical cost accounting and make information more relevant to the users of financial reporting. That's what I was explaining. right? So these are, historical cost basis and current value basis. I hope you can remember the very first day when we were talking about conceptual framework of financial reporting. There are two measurement bases. One, historical basis. Second, current value basis. On the current value basis, we discuss fair value, value in use, fulfillment value, and current cost, right? Fair value is exit price. Fair value is exit price. Fair value has been defined, right? Value in use, fulfillment value, value in use related to assets, fulfillment value related to liabilities, current cost, that is enterprise. That is enterprise. I will explain one by one. Fair value is common for both assets and liabilities, right? Assets and liability. Remember, all these things are telling same value, but different names. Different names at the point of time. All these things are trying to say same value. Okay, but different circumstances, based on some limitations, we need to stick with one of these current value methods if we are focusing on fair value. Current value, right? Okay. Now, fair value measurement as per SLFRS 13, it has been defined. It has been defined. The standard, all definitions are given in fair valuation, and the standard guide us on how to measure fair value rather than when to measure, right? The standard guide us on how to measure. How to measure. Right? How to measure. All the mechanisms, approaches are given in this particular standard. Right? When to measure is given in respective standards, LK 16, LK 14, mission properties, SLFRS 30, SLFRS 6, 9, likewise. Right. Instances where fair value is used. What are the instances? SLFR, as per SLFR 15, revenue from contract with customers. Yes, we use fair value method when consideration received or receivable. So we recognize revenue at fair value. We recognize revenue at fair value, respective of cash receipt or payment or cash receipt particularly. We recognize revenue at fair value, right? That has been given as an example. The subsequent measurement, yes, there are many circumstances where assets as well as liabilities are measured at fair value. These are some examples: LK 16, 38, intangible assets, 14, investment properties, right? Okay, then determining the recoverable amount as per LK 36. Did you learn LK 36? Did you learn LK 36? Did you learn LK 36? It seems no. Right. Okay. So when we are calculating recoverable amount of an asset, we would be using fair valuation. So recoverable amount is higher of fair value less cost to sell and value in use. right? I will write somewhere here. Fair value less cost to sell or value in use, whichever is higher. Whichever is higher, right? Okay. Okay. These are some applications on fair valuation. LKS 16 initial measurement at cost, LKS 38 initial measurement at cost, revenue, fair value, financial instruments fair value initially. Agriculture standard years initial measurement fair value. LKS 40 investment properties at the initial measurement should be at cost, right? That should be cost. That should be cost. Subsequently, we have two methods, fair value method as well as fair value method, right? Right, otherwise. At cost. Okay. Okay. Subsequent measurement, fair value method is allowed. Intangible assets, fair value method is allowed. Financial instruments, fair value is allowed. 41 financial fair value is allowed, right? So there is option to use. Investment property, yes, allowed, right? Allowed. Okay, allowed. Okay. Right, moving on. So this is the definition of fair valuation. Fair value. Please take down in your summary, please. Please write it. From here to here. The price that would be received to sell an asset or paid to transfer liability in an orderly transaction between market participants at the measurement date. At the measurement date. Please write it. Okay, hope you have written this word by word. Price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between market participants at the measurement date. Now we can see one by one. Price. What do you mean by price? Price, that is the exchange value. If we are if you are selling something, then there should be a price to exchange, right? So that is the meaning of price. Let's say we are selling buns, so there is a value for that particular bun, exchange value. That would be identified as the price. Wood. Wood means that is that can be a hypothetical transaction. That could be a hypothetical transaction. That's why the wood word is used in this definition. Then receive to sell. Receive to sell. That is exit price. So when we are selling something, we are getting the price that is called exit price. Exit price. Pay to transfer liability. Then the liability would be derecognized. So that is also exit price. That is also exit price, right? Receive to sell. In that seller's point of view, we risk and rewards will be transferred. Then we are getting price. So that is an exit price. Orderly transaction means there is no any stress. Normal marketing strategies will be used. There is no any pressures, no any targets. Normal transaction. That should be a normal with the normal conditions. Normal conditions without having any pressures and all. Normal conditions, what would be the in normal conditions that sale should be happen, right? So that is called orderly transactions. Market has time to operate and no duress. Okay. Then market participants, independent, knowledgeable, and willing and able. There is no any biased things. Market participants. Let's say you are going to sell something to your close family members. Let's say you are selling something and you are going to sell to your close family members. So sometimes you are going to sell not at fair value, lesser than that. Okay, so buyer and seller should be knowledgeable. Let's say they are not knowing about the markets and they are going to sell at higher price. So that's not a fair value, right? So market participants should be independent, knowledgeable, willing and able. Let's say you are going to sell something for unwanted people. So they don't need, but you are going to push and trying to sell them. So they are not willing to buy. But you are trying to push. Then that transaction would be happened not at fair value. So market participants, remember, market participants should be independent, knowledgeable, willing and able. Then measurement date. Measurement date, the transaction would be assumed to occur. So there is a specific date for that particular transaction. Right. Okay. So these are the key parts of the definition. Yes.
So I have a question, sir.
Yes, please.
Yeah. We'll say, sir, if we'll say specific car in the market, we'll say, sir, 40 million. So at the point of selling, if one person is bargaining, can you sell that to me for 38 million? and the seller is agreed to that, and he's selling that for
That is fair
38
value.
million.
That is fair value.
38
That
million
is
is the
fair
fair
value
value, right,
because
sir?
there is no any close family member, right? That's a kind of market participant. No? Car seller and the customer, market participants. Those people are willing, able, independent set of people, right? Okay.
Yes, sir. Okay,
So
sir. In
that
that case, sir,
38 million is the fair value.
fair value. Okay, sir. Though in the market the value is 40 million, but if they are agreeing to do that for 38 million, that is 38
Yeah,
million is
that
the
is the
fair
fair
value, sir,
value.
right?
That is the fair
Oh.
value.
Okay, sir.
That
Thank
is
you,
the
sir.
fair.
Got it.
Yeah.
Thank you.
Okay. Right. Okay. Then these are the key features or key parts of the definition. The price, that is exit price, asset that is applicable for assets or liability, orderly transaction. Orderly transaction means in normal condition there is no any pressure, right? In normal conditions, that particular transaction should be occurred. And market participants. Okay, so price, we'll take one by one. Price. Fair value is an exit price. That is price that the entity disposing of an asset or transfer a liability, rather than price that an entity acquiring an asset or liability, right? So this price explains entity disposing an asset. Let's say we are going to dispose inventory. So that's exit price. Let's say there is a liability, we are going to settle that liability. So exit price, right? Rather than acquiring an asset or liability. Hope that is clear. Hope that is clear. Exit price, asset price that would be received to sell an asset, liability price that would be paid to transfer the liability, right? Okay. So this fair valuation would be applicable for assets or liability, no? So fair value measurement is for a particular asset or liability. It could be financial asset. It could be property, plant, equipment. It could be financial liability, debentures. So whatever, share investment. Okay. Then characteristics of assets or liabilities that market participants would consider determine the price at the measurement date. Okay. Characteristics of assets or liabilities that market participants would consider in determining the price. So market participants would determine, as you one of students asked, car seller and the customer. Those are the market participants. They determine based on other many factors: demand and supply, vehicle condition, competitors' prices. So there are a lot of factors. Based on that, market participants decide. Market participants decide on demand and supply condition. Characteristics. Condition. Condition. Sometimes that could be a used motor vehicle. Sometimes location. Sometimes that particular land is located in inside the country, countryside. Inside. No buses available. Sometimes there is a high tension wires going, in the above the land. There are a lot of high tension wires, 33,000 kilovolts. Then the value would be declined. Then restrictions, sale or use of assets, building construction restrictions. As I mentioned earlier, wires are above the land, electricity wires. Okay, so there are some restrictions. So Those are the characteristics on those assets and liabilities. Okay. Please disturb at any time. If you have any questions, please ask me rather than passive listeners. Please be active, active learners. Be active learners. Please ask questions. I'm very happy to answer. Okay. Otherwise, boring because I cannot see you. I'm just explaining to my computer. Therefore, you can disturb me at any time. Right. Still, we are in assets or liability part in the definition. Standalone asset or liability. Standalone, like property, plant, equipment, financial instruments, investment in shares. Sometimes there are group of assets, cash generating unit. Maybe in previous semester or this semester also, I think I discussed about cash generating units. Cash generating unit. In order to earn money, there should be minimum set of assets and liabilities. For an instance, let's take 138 bus route. You would purchase a bus, right? You would purchase a bus without having route permit. You don't have route permit. Can you earn money from passenger transport from 138 bus route? Can you earn money even though you purchased a bus? You don't have a license. You don't have permit to travel or transporting passengers from 138 bus route. So in order to earn money from passengers, minimum they have to have a bus as well as permit. That is an intangible asset. Right? So those two things could be identified as cash generating units. Is that clear? Is that clear?
Yes, sir.
Yes, sir.
Okay. Now look at orderly transaction. Orderly transaction. I was trying to explain what orderly transaction is. We'll see the definition and see. Orderly transaction is defined in the standard as a transaction that assumes exposure to the market for a period before the measurement date, allow marketing activities that are usual and customary for transaction involving such assets or liability, and it is not forced transaction. බලන්න බලෙන් කරන එකක් නෙමෙයි. බලෙන් කරන එකක් නෙමෙයි. That should not be a forced transaction. That would be a normal transaction with normal marketing strategy, normal usual thing. That is called orderly transaction. ප්‍රශ්න තියෙනවා නම් අහන්න ඕනේ. Did you understand that? Did you understand that? Did you understand what orderly transaction is?
Yes, sir.
Right, okay. Now this is very important. In order to understand or identify orderly transaction, we should know there are basically two markets: principal market and most advantageous market. Right? Principal market and most advantageous market. Principal market and most advantageous market. So look at the definition. Look at the features of principal market. So we can sell our good in different locations. maybe Asian market, maybe Southeastern market, maybe Eastern market, Southern market, likewise. But we need to identify the most, principal market and most advantageous market. හරි ඔන්න බලන්න මේකේ features ටික focus කරගන්න. Principal market කියන්නේ the market with the greatest volume and the level of activity for the assets or liability. Greatest volume. If you are given a couple of markets and if you are given activity to identify the principal market, how we are going to do that? Highest volume market is the principal market. Highest volume market is the principal market. හරි නේද? ඊට පස්සේ එන්න most advantageous market. The market that maximize the amount that would be received to sell the asset or minimize the amount that would be paid to transfer liability after considering both transaction cost and the transport cost. So when you are going to calculate most advantageous market, you should deduct transaction cost as well as transport cost, right? If that is asset side, you should calculate the highest value. If that is liability side, you should calculate the minimum value, right? Market that maximizes the amount that would be received to sell an asset or minimizes the amount that would be paid to transfer liability, right? After deducting both transaction cost and the transport cost. Then you need to calculate and see, if that is asset maximum one, if that is a liability minimum one. Okay? Make sense? Is that clear?
Yes, sir.
And the transport cost. Transaction cost, maybe stamp duty, lawyer fee, those are incremental cost, incremental direct cost, right? Those are relevant costs. Those are relevant costs. Would not have been incurred at decisions to sell the asset, transfer the liability, not been made. If we are not taking that particular decision, that cost can be saved. That cost can be saved. That's what we are saying relevant. That's what we are saying relevant cost, right? Cost to sell an asset, transfer liability in the principal or most advantageous market for assets or liability that are directly attributable to disposal of the asset or transfer liability, right? Examples there could be, write some examples, precise examples, stamp duty, lawyer fee, etc., etc. Those are transaction costs. Remember, when you're calculating most advantageous market, transaction cost as well as transport cost should be deducted. Then transport cost incurred to transport an asset from its current location to its principal or most advantageous market. Look at this. Transport cost is incurred transport an asset from its current location to its principal market. Principal market. Principal market or most advantageous market. That is the transportation cost. Because we should, bring them into sellable condition. Sellable condition. Then only end customers come and sell, come and buy. Right. Okay. Both are used to determine most advantageous market. However, only transport costs are deducted to calculate fair value. Only transport costs are deducted to calculate fair value. Now in the market, so whatever market, principal market or most advantageous market, you can identify those markets, but after identifying them, fair value can be identified or fair value can be calculated only after deducting transport cost, transaction cost. Anyway, we are considering in respective standards. No? Therefore, only transport cost will be deducted in order to calculate fair value. Transaction costs are not adjusted in measuring fair value. Please keep that in your mind. Right. Activity number 1. Activity number 1. So what you need to do is you need to identify or determine principal market. So there are 2 markets, Asia and Europe. Determine the fair value. Assume that the volume information is not available. Determine the fair value of the asset in the absence of volume information. In the absence of volume information. If volume information is not, you need to calculate fair value by using highest, by calculating highest value. Highest value, most advantageous market can be calculated. Right, please do this activity. Please do this activity quickly. Right? Did you answer?
Yes, sir. Yes.
Right. What is the principal market?
Asia.
What is the principal market?
Asian market, sir.
Asian. Right. Good. Because high volume, 100,000. Determine the fair value. Determine the fair value. Fair value හදාන්න මොකද්ද ගන්න එතකොට? Asian market එකේ fair value කීයද? You should deduct only transport cost. කීයද එතකොට පුතා fair value එක? In Asian market, what is the fair value? කොහෙද කියන්න කොහෙද?
23,000, sir.
23,000, right? Okay, good. So what is the, if there is no volume detail, you need to identify the most advantageous one. What is the most advantageous one?
Europe.
How did you calculate?
From the sales price, I have deducted transport cost and transaction cost. So the maximum value amounts to 22,000 from Europe. Asia only gives 21,000. So
21,000. Very good.
most
Very good. Yes, most advantageous market is Europe, right? And what is the fair value of that market?
24,000.
24,000. Only transport cost should be deducted. You can give a transaction cost එක අඩු කරන්නේ නැහැ fair value හොයනකොට. Right, very good. So these are the answers. Market one in the sense Asian market is the principal market, 23,000. Go to most advantageous one. Market two again Europe. Net proceed is 22,000. got a fair value එක 24,000. හරිනේ? Okay. Please take your red pen and mark. Okay, moving on. Activity number 2. Right, please answer for this question. Everyone should answer, right? I trust you. You are answering independently.
Excuse me, sir. Hello.
Right? Shall we discuss the answer? Shall we discuss the answer? Or do you need more time?
Excuse me, sir.
Yes.
Yes. Actually, could you please explain the previous activity because I didn't get the last point. How did you calculate that without?
Right. Okay. I will.
Yeah. Thank you.
Right. In this market, now there are two markets. No.
Yeah.
If volume detail is not given, we need to identify the most advantageous market. No.
Yeah.
How most advantageous market is calculated? Most advantageous market is calculated based on highest selling price or lowest liability settled, right? If it is a selling price, we need to identify the highest one. If that is a liability settlement, we need to identify the lowest one. Okay.
Lowest.
So when you calculate it, you should deduct both transaction cost as well as the transportation cost, right? When you calculate the most advantageous market, right? But once you identify the most advantageous market and calculate in the fair value of that particular market, only you are allowed to deduct transport cost. Only you are allowed to deduct transport cost, not the transaction cost. Okay?
Yeah.
In that case, what is the most advantageous market out of these two? The VC you can deduct 5,000. 25,000 you can deduct 3,000. So what is the most advantageous market?
Europe.
Europe. So in that Europe market, what is the fair value of this particular item?
24,000.
24,000. Okay.
Yeah.
Is that clear now?
Okay. Yes, got it. Thank you.
Okay. Make him Do you need more time? තව විනාඩි කිහිපයක් ඕනද මේකට උත්තරේ දෙන්න? කියන්න ඔයගොල්ලෝ කියන්න. ඔයාලට වෙලාව
No,
ඕන
sir,
නම් කියන්න.
shall we continue?
Right. So we'll discuss. Right.
Yeah.
In this case, based what is the principal market? What is the principal market?
Northern market.
Northern market. Yes. 6,000. හරි. Most advantageous market එක මොකක්ද?
Western market.
Western, sir.
Western නා? හරි. ඒකේ කීයද පුතා? එතකොට එන්නේ මේ highest value එක එන්න ඕනේ. ඒකනේ කීයද එන්නේ? What is the
1485,250.
1485 after deducting both transaction cost as well as transport cost?
Yes, sir. Yes.
Yes, sir.
Right. Okay. Western. Okay. In Western market, what is the fair value?
1494.
1494. So 1.5 million minus transport
6,000.
cost 6,000. 1494. Yes, that is the fair value. Right. Delta wishes to value tractors at 1,485,250 per tractor. As this is the highest net proceed per tractor, Delta would like to obtain advice as whether this valuation would be acceptable under SLFRS 13. As SLFRS 13, most advantageous market is Western. Principal market is Northern. In Northern market, what is the fair value? Northern market, what is the fair value?
1446. 1446.
1446,000.
6. 1446, 800.
1 million. Oh, no, 1 million.
446,800.
446,800. Right. Okay. Right. Now we have identified principal market. We have identified most advantageous market. Then we calculated the fair value. Then we cannot agree with the price that Delta wishes to value tractors. Ne? So that also should be written. Answer එක. Highest volume level activity එක. In the absence of principal market, it assumes that transaction would occur in the most advantageous market. In Delta's case, Northern would be the principal market. හරිනේ? We identified. එතකොට එකක ගන්න හොයලා you should multiply by 200. Did you do that? Did you get this one? Did you get this answer? In the Northern market, you told me one tractor's fair value, then multiply by 200. Did you get this answer?
Yes, sir, we got it.
Right. Okay. Moving on. Arane?
Excuse me, sir.
Yes.
Why
Yes.
200 vehicles?
Hey,
200 vehicles?
200 කියලා කියනවනේ පුතේ ගානේ. මේ තියෙන 200 new tractors කියලා. Delta wishes to find a fair value of 200 new tractors.
Okay, sir. Okay, got it.
Okay.
Excuse me, sir.
200 new tractors. That since there is a principal market, we can value it in the principal market, right? If there is no value-based data, then we can identify the most advantageous market. Right? Okay.
Excuse me, sir.
Sir, thank you.
Yes, Puta. තා කියන්නේ ප්‍රශ්න කාණු.
සර් එතකොට මේ අපි අර most advantageous market එකට යන්න ඕනේ සර් principal market එකේ information නැත්තම් නේද සර්?
ඔව් ඔව් ඔව්.
හරි සර් right okay thank you.
හරි. next one. දැන් කියන වෙලාව 9ට 15යි නේ. Do you need a break? Dinner break එක ඕනද පුතාලට? Do you need a break? Do you need a break? Okay, we'll take a small break. We'll continue the class 9 o'clock. Huh? Okay,
Okay, sir.
we'll take 15 minutes break.
Okay, sir.
Okay. Refresh and come. පොඩ්ඩක් එළියට ගිහලා පොඩ්ඩක් එන්න. Right, okay, we'll continue the class. Okay, now from the definition we have discussed price, then orderly transaction, right? Now we need to discuss market participants. So already you are aware in market participants should be independent, knowledgeable, willing and able. Willing and able. So I have taken time and I explained in the initial stage, right? Independent means each other, not related parties. Related party in the sense husband sell goods to wife, husband or father sell goods to daughter or son. No, those are related parties, right? So we cannot say independent then. When we identify market participants should be independent, knowledgeable, willing and able. A knowledgeable means with reasonable understanding about the assets or liability. Willing, enter into contract, able, enter into transaction. Okay. Okay. Fair value, measure the fair value using the assumption that market participants would use when pricing the assets or liability. Okay. Market participants act their economic best interest. So that in the initial question, I can remember market value 4 million and 3.8 million would be with the price that they have agreed, both parties. So that is the fair value. Okay. So there are 4 steps in fair value measurement. There are 4 steps. First one, the item being measured, that is unit of account. So there should be an item to be measured. Then for non-financial asset, the highest and best use of asset and whether the asset is used in combination with other assets, cash generating unit. The third one, the market in which orderly transaction would take place, principal or most advantageous market. Then appropriate valuation technique to use when measuring the fair value. So valuation techniques will be discussed later. Okay, step one is determine the assets or liability and subject to measurement. Okay, that is step number 1. Okay. Right. When we determine assets or liabilities that subject to the measurement, because there should be an item to be measured, right? So there are some basic questions to be answered. So what is the location? What is the condition of the asset? Whether that is precondition one, if that is a land, what is the location? So there are conditions or factors that we should consider when it comes to measurement of an item, either asset or liability. Okay. Then highest or best use of non-financial asset. The financial asset already you are aware. So the non-financial asset as well, such as PPE, inventories. Those are non-financial assets. Okay. right? Highest and best use. In for non-financial asset, let's say PP or intangible assets based on respective standards. There are measurement methods in subsequent measurement. So there is a option to select fair value related measurement, that is revaluation method. When it comes to those methods, so fair value is determined based on the highest and best use of the asset from the perspective of market participants. Best use of the asset, right? Now read second bullet point. Highest and best use is defined in the standard as the use of the non-financial asset by market participants that would maximize the value of the asset or group of assets and liabilities within which the asset would be used, right? So when we are measuring non-financial asset, we should use highest and best use. Based on that, we can measure the fair value. Highest and best use should be physically possible, legally permissible, and financially feasible. So all these things need to be looked into when it comes to highest and best use of those assets. The highest and best use is not based on how the entity is currently using. That is based on what? It is based on the perspective of market participant. Example, land on which the factory currently stands could be used for residential housing development. Land on which factory currently stands could be used for residential housing development. Like they say, there is a land which is a current factory, industrial zone. If we are going to develop that done as residential housing development, what would be the price? So that is the perception of the market participants. That's what we highlighted here. Highest and best use is based on perspective of market participants, right? Market participants, please keep that in your mind, right? Then determine the valuation premise or premise that is appropriate. Valuation premise. In combination, as well as standalone. So we can determine the valuation in combination with other assets or else standalone. Standalone means one asset, standalone, when market participants would obtain maximum benefit principally through using the asset on standalone basis, using that particular asset. Combination means when market participants would obtain maximum benefit principally through using the assets in combination with other assets and liabilities as a group. So best example is cash generating unit. All participants will use the maximum benefit when other assets also available. Then only maximum benefit can be used to market participants, right? The asset will be sold as an individual asset, not as a group, but will be used by the market participant in conjunction with other assets, right? Okay, that could be understood easily. The make here one balance. Explain how the entity would determine the highest and best use of the land. Highest and best use of the land. Right. Activity number 3.
Excuse me, sir. You're on mute, sir.
Oh my God, I was explaining for 10 minutes.
We couldn't hear, sir.
I'm sorry. Yes, I was, I read
Okay,
the
sir.
question, right, already. I hope you have answered for this particular question. So in this one, explain how entity would determine the highest and best use of the land, right? There are two options, so they can continue as factory, as well as they could convert them into residential building. So those are the possible users, right? Possible users, right? So the measurement basis, if they convert into residential apartment, they can use standalone measurement basis. So what they need to do is existing factory building need to be demolished or removed. So there is a cost for that. Then they need to build new residential apartment. There is a measurement. So they can use standalone pricing method, standalone pricing or measurement for that usage. On the other hand, there is another one, that is continue as a factory. Continue as a factory also another option, right? Then in order to measure it, all other assets also will be taken into consideration for the measurement basis as a combination. So look at this in combination, right? I hope you have read this, even though my, I was muted. So you have seen the slide, right? You have seen the slide. So based on this, based on market participants, we could identify what highest and best use of the land. So that's subjective. Based on market participants, it could be determined. So currently we have identified two best users, either continue as factory building or else convert into apartment or residential purpose. Next step is determining the principal or most advantageous market. You are aware how these markets are identified, right? For that, entity have to have exhaustive search. The market it usually sells in presumed to be the principal market unless contrary evidence exists. Generally, principal market, the highest volume market would be identified as principal market. If there is no such market, we could identify most advantageous market. Right, then last step, determine the appropriate valuation technique. These are the approaches for the valuation techniques. This is the last one. First one, market approach, income approach, and cost approach. Market approach, prices generated by market transactions involve identical or comparable assets or liabilities. So we would be looking at the other assets and liabilities, market assets and liabilities. If that is identical with the other assets, then we could use market approach. Income approach means converts future amounts. So if there is an asset, there are cash flows generated, cash flow, income, or expenses. Then based on the cash flows that we have identified, we can discount them and get the values, get the measurement. So that is called income approach. Then last one, cost approach. The amount that would be required currently to replace the service activity of an asset, current replacement cost. If we are replacing the same thing, there is a cost that we will be involving or incurring. So if we are using that approach, that is called cost approach, basically income and the cost approaches based on market participants, right? Market participants, right? Continuation of the same thing. Now there are three approaches or techniques, right? Okay. We have to have professional judgment. So fair valuation, anyway, there is a judgment. That's the challenge. Accuracy would be the challenge in fair valuation. But cost model, even though that is not up to date, accuracy is high. But in fair valuation method, even though that is up to date, relevant, accuracy is the problem, challenge. Because there are judgments are involving. It will change based on circumstances, information availability, right? So that's the challenge. But we should try to measure in reliable manner. Valuation technique used to measure fair value should maximize the use of relevant observable inputs, minimize use of unobservable inputs. There are levels. See, observable and unobservable. On observable data, the accuracy, reliability is higher in observable inputs, right? If you can observe something and get some data, that is more reliable than unobservable. If there are unobservable data, we need to estimate things. Right? So when it comes to estimating, you would be using market data. Market data, observable data is not available, then you need to do the what you call estimations based on what best available information about market participants' assumptions. So these are the levels: level 1, level 2, and level 3. Level 1, quoted prices. There are active markets in, let's say, for an instance, Colombo Stock Exchange. Active market is there. We know the prices of shares. Then we can measure price. We can measure investments by using level 1 inputs. Okay. Then if that is not available, we can go to level 2 inputs. Inputs other than quoted prices included with the level 1 that are observable for the assets or liability, either directly or indirectly. Right? Level 1 is best. Level 2, then if that quoted prices are not available, we can go to input level 2 inputs. The last one, level 3, that is unobservable input for the assets or liabilities. Unobservable. Quoted prices, no, not at all. But there are some mechanisms to measure assets and liabilities based on unobservable data or input as well. Right. Some examples are given. Level 1, level 2, level 3. Level 1, public traded shares. Level 2, commonly used for assets such as land, building. We would be using level 2. Level 3, cash generated unit, trademarks. Generally, level 3 would be, based on other analyses, forecasts. So those things would be used for estimate, to use or to measure level 3. Right. So these are some what you call disclosures, valuation techniques, fair value hierarchy. This particular document has been taken from one of our annual reports. How they provide is at level 1, level 2, level 3. Group and the bank. Right? Group and the bank. Look at these non-financial assets, property, plant, equipment. That is in level 3. Investment properties, level 3 in the group. Right? Under financial assets, derivative financial assets, currency swaps, forward contracts, spot contracts, currency options. Those are under level 2. Level 2. Right? Government securities, level 1. Equity shares, level 1. Okay. Now you can get some understanding about what. So there is a requirement for level 1, level 2, level 3, yeah, based on fair value measurement. So these are disclosures. Already you have seen how a bank has disclosed on fair value method, fair value levels. So this is very important standard. Very important standard. Right. Okay. With that, SLFRS 13, I have covered. You know, this is so lengthy discussion, almost 3 hours taken to explain and do practice questions on SLFRS 13. I hope you have learned SLFRS 13 fair value measurement standard. Right. Okay. I think next week we will be having classes, right? Next week. Do we have classes next week? Batch representative, are you there? Batch representative. Seems he is not there. Anyone in the class? Anyone in the class?
So according to the given timetable, it will be ended by yesterday. I don't know whether they will extend the classes or not.
All right, then okay. So I have covered almost all required standards. Again, there are some other things because syllabus is too lengthy, but we have covered. But if they are giving some additional time, I could cover some other standards as well. Maybe LKS 20 government grants is not a big one. That's a maybe 1 hour work. We can cover that one as well. LKS 41 also very simple standard. That is also very small standard. So I will discuss with Miss Jennifer, and if they are allowing, so we can do a class at least on like this online. I will discuss and see. Yeah. Okay.
Okay, sir. Sir, can you share the slides that you have discussed today?
Yes, definitely. I will be sharing. I will be uploading it or sharing with the. I will share. Don't worry about it. I will share it.
Thank you, sir.
Right. I will upload to the LMS. Right. Then there are a few groups that I need to take presentations. Please contact me, the leaders of those groups. I think 1 or 2 groups need to present. Majority of groups already presented during weekends, during weekdays night. Last week also, last couple of days, last Friday also I have taken 1 group with the rush. I was attending a funeral at that day. Then, however, I have taken 1 presentation. Right. Okay. Please contact me for the presentations for the balance teams, balance groups. Right. With that, I conclude today's session. Thank you very much.
Excuse me, sir.
Yes.
Yeah. One more request. Sir, is there any that paper discussion or paper structure discussing?
Yes. Paper structure like this. The first question for your paper for your exam is all questions are compulsory. All questions are compulsory, no optional questions. Paper would be, consist of altogether 4 questions. Question number 1, you could earn 40 marks, that is on consolidation, parent, subsidiary, and associate or joint venture with 10 to 15 adjustments, right? 40 marks. Then
Okay.
Balance questions, 20 into 3, 60, 20 into 3. So I would be putting questions on all discussed standards. All discussed standards.
Okay.
Right?
Okay.
I will discuss with Miss Jennifer and trying to get some additional class for covering a couple of standards further, right? Maybe LKS 41, LKS 20, those are small standards. In addition to that, LKS 23, I think you have learned, right? 23. Did you learn LKS 23 borrowing cost standard? Did you learn it?
In this semester, sir, we didn't discuss that, the borrowing cost.
No, not this semester, previous semesters.
Yeah, previous semester we discussed that.
එහෙනම් මේක කරන්නේ එම semester එකේම කරන්න ඕනේ නෑනේ.
Okay, sir.
So I can test then, I can test. Right? ඒවත් දාන්න හොඳද මේ semester එකම ඉගෙන ගත්ත ඒවා නෙමෙයි ගිය semester එකේ ඉගෙන ගත්තු ඒවත් I can test. Okay. So please have a look on those lecture materials as well. But mainly focus on standards that we discussed in this semester. හොඳද? නමුත් ලකුණු 5ක් 6ක් හරි මම අනිත් ඒවාට අහන්න උත්සාහ කරනවා. ඒක නම් පොඩ්ඩක් ඔළුවේ තියාගන්න. Right? Okay. Right. With that, I conclude. So before winding up, any doubts, any questions to be cleared?
So one thing, can you discuss one more consolidation question in the class? I mean, if we having any additional class, if you can with some adjustments.
Sure, I will, but you should come up with the answers. You should attempt. Right? So don't expect answers from lecturers. You should answer and come. You should attempt, but there are challenges. I will be discussing. I think first question was discussed. If we have time, definitely I will be discussing. But if we don't have time, what we should do? You can contact me, ask. You can contact me, ask any doubts. In order to ask questions, you need to first answer it. Right? Then you can ask doubts. Unclear places can be clarified by calling me. In case that we could not find a date and time. Harida.
Okay, sir. Right, sir. Can you upload some past papers to the LMS? Then we can have a look.
Yeah, past papers in the sense. Right. I will try. So I already told you the structure. First question, consolidation. Then there are other 3 questions, 20 marks each, covering from all standards. LKS 32, SLFRS 9. Now today we did SLFRS 13. Then LKS 41, LKS 20, LKS 21. අපි ඒව උත්සාහ කරන අර දෙකත් ඉවර කරගන්න. හරි නෝ ඔය තමයි questions එන්නේ. ඔය තමයි එන්නේ questions. Okay නේ?
Okay, sir. Thank you very much.
Right. Okay, right. Right. Thank you very much.